Hey everyone, Jeff Dorman, CIO of Arca, back again for another edition of That's Our Two Satoshis Live, even though we're pre-recording this 20 minutes earlier this time, to appease Alex Thorn, Head of Research at Galaxy's Schedule. Alex, how are you, sir?
I'm well, Jeff. Thanks for having me back.
All right,
Appreciate the appeasement.
absolutely. For those new to the show, we just talk about everything happening in the crypto markets. I also write a blog. You can find it on our website, ar.ca/blog. This week, I actually talked a lot about what's kind of the two faces of the market. And Alex, the reason I have Alex here is I want to talk a lot about the Genius Act and stablecoins and Washington policy and regulation. But for those who are a little bit more, I can't wait for that. I got to get what's happening in the market right now. I'll just tell you this. There have been two distinct sell-offs this year, two completely different crypto sell-offs. The first was January 8th or 9th, right around the Trump token launch that then bled into the Libra, Argentinian Libra token launch and all the meme coin on pump.fund nonsense. That sell-off from January 8th, January 9th, January 10th or so down to February 19th was entirely crypto specific. It had nothing to do with macro. Equities were still hitting all-time highs, gold all-time highs. Then you had the second sell-off, which was February 19th, when you started talking about Liberation Day and tariffs, and the entire world went down from February 19th until the lows of April 9th. That was entirely macro related. Honestly, I don't even think crypto would have gone down if it wasn't for the fact that it was already so weak heading into that. But the macro related stuff from February 19th to April 8th was another massive sell-off, all related to tariffs. That's completely reversed starting on April 9th when you had the 12% update in the NASDAQ, combined with the fact that all these tariffs were getting pushed back 90 days and ultimately into last weekend's settlement with China or progress with China. Long story short, equities are basically fully retracing the entire tariff nonsense. Crypto hasn't even retraced that, let alone the January, February sell-off. So it might be simply as easy right now as go sort by year to date, find the things that you like that are down the most, and look to buy those, because everything that's happened this year in crypto has been bullish from a regulatory and policy standpoint. Absolutely all the macro bearish stuff is completely getting unwound and retraced because it was nonsense to begin with. I mean, you could go back to the 2018 Trump presidency and see the exact same chart. The fact that every Wall Street analyst and macro strategist and hedge fund was talking about global recession and get out of everything and Black Monday and all this nonsense. Ridiculous. Just ridiculous how wrong Wall Street has been for years, and even more so again in these last 6 weeks. So feel free to read the blog if you want to learn about that. We also talk about why Ethereum is finally going higher. But again, that's not why I brought you, Alex. You are, in my opinion, first of all, shout out to Galaxy, just doing awesome things. Really excited about the U.S. listing of the stock. Shout out to Alex at Galaxy, who's been just awesome from a research standpoint on pretty much anything you'd want to know, from deep dive tokenomics to sectors to probably more recently really diving into the Washington policy stuff. What happened to the Genius Act? Who killed it? Why is everyone so mad? What is happening?
Yeah, thanks for the kind words, Jeff. And always love reading your blog. That's our two Satoshis. So look, it's the guiding and establishing a national innovation. What is the whole title here? Guiding and establishing national innovation for U.S. Stablecoins Act. That's Genius Act. And it's the Senate's version of stablecoin legislation that creates a comprehensive federal regulatory framework, federal standard. It requires that state frameworks like NYDFS or somewhere else come up to a new federal minimum standard. It also creates the requirement for offshore issuers that want to operate in the U.S. to obtain some kind of U.S. License, or have it certified that the foreign license they hold is equivalent and is reciprocal. And it creates standards for the collateral that has to back the stablecoin. It creates, it's all very short-dated treasuries and cash equivalents. It adds consumer protection. It adds bankruptcy protection for stablecoin token holders if the issuer itself goes bankrupt. So a lot of good consumer safety stuff there. But it also creates a pathway for crypto native issuers to be accepted into the mainstream, but also for traditional issuers such as banks or even fintechs to be able to use crypto technology, blockchain technology to play in this market. Overall, it would create a much safer, much clearer backbone upon which stablecoins, dollar-based stablecoins, could grow tremendously.
What's the best analogy? Is this like regulating money markets, where it's like, yeah, you can have money markets and they have to have certain instruments in them, or is it like regulating checking accounts? Like, what's the?
Yeah, that's a good question. I think from a collateral standpoint, money markets aren't a bad analogy. It's all short-dated treasuries, pretty much. It's not, I think, 92 days or shorter, or sort of equally liquid cash-like equivalents. But unlike money markets, obviously you can send these stable coins. And I think a very interesting, to any party, a very interesting debate around between the two political parties and also sort of in the policy circles in Washington around stables is, well, who can you send them to? Who can hold them? And of course, current stable coins like USDC and USDT, you can send them to anybody. Sure, the issuer, for whatever reason or at the direction of a government order, can freeze or seize them, but there's no requirement that the recipients be previously whitelisted, right? And that was going to be
Which,
true
by the
in
way,
this version of the
is
bill
sort
too.
of the double-edged
that-
sword. Like one of the taglines I've used since being in crypto for almost 10 years now has always been, crypto is both an investment vehicle and a payment vehicle in the same instrument, and that is awesome from a usage standpoint, but creates tons of problems from an oversight standpoint.
Well, and that's another good point too, because the money market funds, while you can't send the shares as payment, they accrue interest from the underlying collateral. That's their sort of defining feature. That is prohibited by this bill. It was prohibited by the House versions of the bill. And the reason is that if you take the sort of the best of a digital money that can be spent as payments, but it's Venmo, but even better. But then you marry it with the interest-bearing nature of a money market fund. A lot of people were worried that would kill banks. It could even kill money market funds, right? You've already seen bank deposits have been sucked out of the banking system and sent into money market funds over the years, right? It's already a problem. Nobody wants to earn, whatever meager, 0.5% at best, savings account rate you might get at a bank when you can earn the treasury, effectively the short treasury.
Which by the way, is kind
rate
of sad when you think about it. Like, again, the 99% of global finance exists because of who earns the float in a given time, right? Like who can earn that interest while you're holding assets idle in between a transaction. So obviously,
right. I mean, the banks themselves, that's their main
business model is
business
who
model.
earns the interest, who earns the float. Obviously, in a perfect world, if you didn't have to protect an entire banking industry, you'd say, yeah, that makes a lot of sense. Let's give the user of the stablecoin all of the interest, less some sort of fee. That would make it, the most obvious answer. But of course, you can't kill the entire banking industry, at least not with the first legislation, probably. So, okay.
Yeah, that's undeniably the best product is a payment stablecoin where the interest accrues from the underlying collateral to the token holder. But so that's the backdrop, right? And this is a good bill. This bill represented a lot of compromise. It was introduced by Senator Bill Hagerty from Tennessee and has co-sponsors Tim Scott, Cynthia Lummis. Tim Scott, the chair of the Senate Banking Committee, Cynthia Lummis, the chair of the Senate Banking Committee's subcommittee for digital assets, and then also Brooks and Gillibrand, two Democratic senators. So a bipartisan bill. It itself, even when it was first introduced, represented a bipartisan compromise on a lot of these issues that we've mentioned: collateral type, AML, KYC, et cetera. And then it went through the markup process, which is inside the Senate Banking Committee in March, which is the sort of official Senate way that the assigned jurisdictional committee can do work on the bill and talk about it. And it was voted out of committee successfully, 18-6, which is a clear majority, with 5 Democrats on the committee voting for it. So then about 45 days later, that was in early to mid-March, then 2 weeks ago now-ish, or 10 days ago, after 40 days of additional back and forth in the Senate behind the scenes and negotiation and work on the bill, a new version of the bill was introduced in the Senate to be put on the floor, to actually be voted on cloture for debate, which is saying, we want to end debate on this and start the process, which is still a process. Even when you end debate, there's still 30 more hours of debate in the Senate. Start the final process of moving towards a final vote. And that was on a Thursday, 2 Thursdays ago. And the Democrats, a contingent of 9 important key Democrats, moderate Democrats, wrote a letter that Saturday night. Senator Gallego from Arizona wrote this letter saying, we actually have a bunch of key problems with this bill still on national security, on foreign issuers, on these 5 categories of things, right? And that really sucked the air out of the process, because as of that Thursday, the Senate had sort of moved it into a position for this cloture vote the next week. But over the weekend, key Democrats that had previously, many of whom had voted for it already in committee, said they were no longer for it in its current form. And that kicked off like a Sunday, Monday, Tuesday, Wednesday of feverish back and forth between Senate Democrats and Senate Republicans, where ultimately they apparently couldn't reach an agreement on this vote. And the vote went down last Thursday, and it ended at a loss. I mean, you need 60 votes to end debate and then formally move forward with the actual voting process. And it was 49-48. So like it's not
Who
really
killed it?
close. All the
Who
Democrats
killed it? I
basically
mean,
voted
the
against
obvious
it.
answer is
Yeah.
Coinbase and Circle are the ones who lose the most from this act, right? Because right now they are a big fish in a small pond, and ultimately, once you let banks and brokerages and others get in the stablecoin game, Circle and into Circle's business sort of dies as being the U.S. issuer of stablecoins, which of course then kills Coinbase because they're getting $1 billion a year from Circle for distributing this, right? I mean, is that the answer, or is there someone else behind the scenes we don't know about who's killing?
No, I mean, I think it's more complicated than that, and I don't know that Circle or Coinbase are responsible. They've both been publicly supportive. I would say the banks, it appears, certainly the community bankers, I forget what it's called, IBAT, I think is the name of their trade, but they came out strongly opposed to the bill. I think there is a lot of fear among the banking world that like, well, wait a second, first deposits have been being drained, right? We've lost, we've gone from like 8,000 banks to 4,500 over the last couple of decades. Banks are struggling as a industry, not literally like the big banks, but like overall,
that's been happening
smaller
decades
banks
now. The regional banks.
Yeah, but I think they're worried that this is like further acceleration. I think also, look, there's politics here. I think the Democrats have made it clear they've been calling this a crypto bill. You saw Senator Elizabeth Warren come out and say now and referencing this World Liberty Financial stablecoin USD1 being involved in the Binance equity raise that they did as a catalyst. She said in her tweet, and that now is not the correct time for a crypto bill. I think that there's
Warren's
been some
always
pushback.
been so protective of the banks, so it's nice to see her getting involved to help them, right?
It's one of the strangest things in my adult life, Jeff, to see that, if you asked me when I was growing up which political party was likely more supportive of banks, I would unequivocally have said the Republicans. I do think that's totally turned on its head over the last, several years, not just very recently. But I do think banks maybe oppose it. Certainly some have publicly opposed it. I think, and I think the Democrats that are looking for ways to attack Trump are now using crypto and categorizing this as a crypto bill, which I unfortunately think is very wrong-headed for a bunch of reasons, not the least of which that I don't think crypto policy should be partisan, but also this isn't a crypto bill, to be clear. Circle and Tether can go on issuing right away. You could issue a stable coin in the US pretty much tomorrow. There is no comprehensive framework, right? So if you want to protect consumers and bring regulatory certainty and rules to the stablecoin market, you have to pass the bill. I mean, Tether does great here. No new rules, right? Great. They're the biggest in the world. They have 150 billion of circulating USDT tokens with no US framework, really, right? So I think this is so wrongheaded. And then also it is not a crypto bill. Again, this would be strict on crypto. It would bring in the banks and the traditional, and it would elevate stablecoin regulation to a near bank standard. I mean, for most of the issuers that might exist under this framework, if it became law, it would be the Office of the Comptroller of the Currency, the OCC, in the Treasury, that would be the primary regulator. That is the regulator of national banks.
So anything, what it does is it makes people stop using crypto as a blanket term, because you'll start to be like, well, wait a minute, that doesn't make any sense. Like, it's clearly just technology with all kinds of use cases. And now we have a framework and for the one use case, meaning stable coins, but there's still plenty of other actual things in the crypto world that need to be regulated completely separately. So it probably leads to what needed to happen years ago anyway, was stop calling everything crypto, stop calling things alts. Like, there's clear different segments of this market that need to be treated differently, and this would have been a good first step in that direction. And it seems like a slam dunk, and it's crazy.
And it's great for the dollar. This is the other thing. I think this is a dollar dominance bill. It is about creating new, easier pathways to distribute dollars worldwide, right? And I think this is totally lost in the debate. People that are close to the debate. Yeah, it is. And that's what we need right now. Think about the geopolitical turmoil in this world. Look at the stubborn treasury yields which won't come down, right? At a time when the world is looking for alternatives to US debt and US dollars, this creates a massive new market for both. So like, this is to me, I mean, this is what Secretary Bessent said in his comments at the crypto roundtable in the White House in March, I think on March 6th. He said, we will grow and expand dollar dominance, and we will use stable coins to do that. right? So like to me, this is like, hey, Republicans, you want America to remain the world's biggest superpower? You should be for this. This is supportive of American empire. And I mean that in that exact way. Hey, Democrats, you want to have the ability to do MMT in the future or borrow a lot more money to do new programs? Like this is supportive of that. So I think framing it as a crypto bill is political. It's not really related to it. But then lastly, the other big implication here, because it's seen as a crypto bill and it was seen as the easier of the proposed legislation in Congress, which with the other major one being market structure, the fact that it may fail, and it is truly on life support as we talk now on May 13th, it does not portend well for anything being done in crypto in the Congress this year. So those two bills, right, legalize and promote stablecoins and regulate them, and then the market structure idea just at a high level is which regulatory body should regulate which tokens under which circumstances, right? Give that clarity to both crypto, but also traditional entities that want to get involved here, banks, brokerages, whatever. That is just more complicated intellectually to organize and is also seen as more tricky politically because you could imagine from a critical Democrat standpoint, that looks a lot more like legalizing the stuff they don't like in crypto. Stablecoin, but anyway, we are where we are. It looks like the two sides have retreated to their corners at the moment. I'm not hearing a lot about a new grand bargain emerging at the moment.
Like,
and I think
what does the next 90, 180, 365 days look like? Is this just, all this excitement we've had all year around legislation it's just not happening? I mean, now we have to wait till, a quarter or halfway through the Trump presidency before you get any actual movement.
Yeah, I really think that if you don't get the stable coins sorted out in the next 72 hours even, probably comprehensive or large crypto legislation is dead for maybe until the midterms or after, depending on the outcome of that. Because you have to realize the floor time in the Senate. I mean, even when I'm talking about limiting debate, that's what a cloture vote is. That's what that 60 vote threshold. There's still 30 hours of debate that will happen after that. And the Senate Majority Leader had budgeted in floor time for that to occur this week after last week the vote passing. After this week, and like with the tax stuff and other administration and Republican majority priorities like immigration and trade and whatever else, like there's not a lot of leash left for Republicans to get the Senate Majority Leader to allocate them the time to work on crypto, especially if they can't tell the Majority Leader Thune that, well, we actually could get something done. Right now, it doesn't look like they can get something done. And now you're looking at all of a sudden, I mean, in Congress time in May, it's practically October. I mean, there is not a lot of time, and it takes a lot of time to actually move legislation. So I fear that through the end of the year,
like, is it
pretty much
75-25 dead? Is it 90-10 dead? Like, what do you think happens in the next 72?
I mean, Novo just said today he thinks it's 75-25 dead versus 25 possible. I would, I don't think he's wrong. We're ballparking here, but I would put it at much worse odds at 90-10, 90% dead at this point. Again, because every day that the deal doesn't happen, you're running, even if a deal can happen, is there the floor time? And I don't think there's much.
Who really gets hurt? Who's the winners and who's the losers from this basically being dead in the water for at least a year?
Yeah, I mean, Circle and Coinbase and Tether all do fine here, right? I mean, I think there was debate over even adding language about not letting issuers or digital asset service providers provide rebates for holding the token, which is kind of how Coinbase pays interest on USDC, right? Like they get the interest, but they separately give you coupons to earn money if you hold more of it, right? That could have been banned, not just direct interest on stables, but also sort of these rebates and whatever coupons and giveaways and whatever. Well, if that's not banned, they can continue operating theirs as expected, as they do today. Circle, as like one of the only large U.S. regulated, I mean, they've got state licensure, but stablecoins continues business as usual, right? Tether is not forced to come on shore and register without a bill like this, so they continue as business as usual. So, I mean, I think it's the crypto incumbents that do fine. I think it's possible that in general, a rising tide lifts all boats, and general stablecoin explosion, the incumbents can also do well. Like, I don't think they need to be opposing it, but I think the losers are, everyday users. I sent a wire yesterday and it was a terrible experience. Would love to have sent stables. And so everyday people, I think the banks, maybe the card companies, they also, Visa and MasterCard do tons of stuff with stables today. They have dashboards and projects and stuff. I don't know if they have some winning business model to use them, or if it's more about innovating and so they don't die. But either way, like the traditional world, I know that community bankers formally opposed it, but I do think existing trust thrifts and depositories might like to issue stablecoins. And I also think America loses here because, like I said, with the tariffs raise the cost of buying our dollars with your goods. When you export to the US, you're buying dollars from us. We're selling you dollars and you're buying them with goods that we import, right? Obviously, we're buying the goods with the dollars, but you're also buying our dollars and we're making it more expensive for you to buy those dollars, which is not something that you want to do. If you're the global reserve currency, it needs to be very easy for you to buy our dollars. That's the entire point. We flood the world with our dollars, and that has consequences like trade imbalances. That's what people, as economists in the 60s, Robert Triffin calls it the Triffin dilemma, that the global reserve currency issuer tends to end up with massive trade imbalances because they're net exporters of their currency, right? But so if we're going to enact this mercantilist trade policy that creates barriers or impediments for dollar reserve status, might it also be great to have something countervailing, even subversive, to also flood the world with our dollars? If our trade partners or adversaries say, we don't want to hold as much of your debt, we don't want to use your dollars as much, we could turn around and say, okay, well, we're going to dollarize the cell phone of every citizen in your country. I think it is a highly subversive and powerful geopolitical tool that both parties should want, and both parties want to remain the dollar reserve as the global reserve. So I think it's a huge miss, honestly, and that's why framing it as a crypto bill is so short-sighted.
What about some of the more powerful lobbyist groups? Like, would any of them come in the last minute who would really get hurt? Like some of the banks and brokers who actually would have benefited from this going through?
Yeah, I don't know. I mean, it's hard to know. I'm not that far behind the scenes to hear like who's been, yelling mean things to the supporters of the bill or encouraging its detractors. But I would say, like, I think the banks are fine with it not happening and remaining niche and this air of uncertainty and even possible illegality. Like banks are fine with that. I think the big banks probably, I haven't seen the Bank Policy Institute, for example. I don't know if which is the trade that represents the biggest banks. I think Jamie Dimon is currently the honorary chair of it or something like that. I haven't seen them say a lot about it. My hunch is that they think that they can be fine either way, but it was the smaller banks. The community banks were rabidly opposed. And then like I said, the anti-Trump politics of it are, although I think they shouldn't be. I mean, a Trump stablecoin would also have to be regulated under this bill. If you don't pass the bill, nobody is regulated. Hello, like I don't understand but I think they're looking to beat up on Trump's family for their involvement in crypto and using this as a scapegoat. And that's what's so sad, because it shouldn't be. The market structure we knew might be a scapegoat for that, but to use stablecoins for that political purpose is very unfortunate.
Congratulations to the U.S. again for failing to actually do policy and legislation.
There is one last thing, Jeff, too, that well. I should say it's not all doom and gloom. The SEC, at which tons of crypto policy agenda lies, they're doing great work. It takes a long time, but they're doing great work on token issuance, what is and isn't a security, how broker dealers can interact with cryptos, whether securities or not, improving the ETFs. Like, there's still a lot good to come for crypto out of Washington, but most of that, it looks like now, I'd have to bet, is going to come from the regulatory side, not from the legislative side.
What do you think? I mean, any broad, we'll end on this, any broad market reactions to this, do you think, when it ultimately officially is dead, or,
we looked at that and I thought there were some interesting trade ideas around, like, well, if it passes, like, should regional banks go, trade poorly, right? Or should, would that improve perhaps the prospects for public crypto companies going public? Maybe they would trade better when they start trading as public equities. Maybe Ethereum, maybe the platforms Ethereum and Solana that carry most of these stablecoins, maybe they trade better under the idea that like an explosion. Bank of America said that $2 trillion worth of debt would be bought by these by 2030 if this bill passed. That would make these stable coins the largest holders of treasuries in the world. So like trading around that, I haven't seen. We looked at this last week when it was clear that the cloture vote was, we kind of thought even when that vote failed last Thursday that like not much has changed since then. It looked pretty dead after that vote, right? Like, and from what I said, like, from what I know, the two parties aren't really discussing much right now since then. So even then, we didn't see much. Instead, we've seen, like you said, equity rally. We've seen ETH absolutely rocket off of that like 1600 range bottom. You see crypto equities doing well. So it's hard to know. I don't know. I think probably not. Like, think about it. It's number stay flat technology. So like the best trades I think of would probably be around certain types of existing payments or bank companies that could either be winners or losers. I don't feel like it's enough to drive crypto specifically.
I think you're right. I think the
lower,
market's telling you that as well. While this is a nice to have and it would be good progress, it doesn't ultimately mean a ton as long as eventually it does get done. So, all right, Alex, that was awesome. I appreciate it. Hopefully this is very helpful to all the listeners here. Have you on again as more things develop. Where can people find you and your research and everything related to Galaxy?
Yeah, thank you, Jeff. Check us out on galaxy.com/research. All our public reports. GLXY research on X or Intangible Coins is me on X.
For those who want to read my stuff, most of the time I just steal it directly from Alex anyway when it is related to Washington stuff. So you can see it on our blog, ar.ca/blog. We'll be back next week. Thanks, everyone. Talk to you soon.